Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Blink Charging, ticker symbol BLNK, which closed on Friday, March 15th, at a price of $2.92, being down almost 15% on the day after having reported earnings on the 14th in the after hours. And so I had covered their earnings call Friday morning and also did put out a short on the chart, what I saw in it, and it was requested that I do a follow-up video on technical analysis of the chart. So that is what I'm doing here. So thank you for the request. And so really what I wanted to go over is, bigger picture, this descending triangle that I see, which is a bearish pattern, not to be confused with a falling wedge, which is bullish. And so looking at the chart here, you do have this horizontal line here that has been tested multiple times. And then you do have this downtrending line that has also been tested multiple times. And so descending triangles tend to break to the downside, and you can think of it as, price just not being able to get higher. It just keeps getting rejected at lower and lower prices. There aren't buyers up here. There aren't buyers up here. It just keeps going lower and lower. And what happens with the retests at the same level, eventually the buyers at that floor disappear. They've all stepped in. There are no buyers. And eventually we break through the floor here. You can think of it like a ball bouncing. It's bouncing here, bouncing again. The next time it bounces, it might break, or, maybe it does another bounce before it tests the floor again, and then it eventually breaks through. It's just, like going up against a door, ramming a door multiple times. Eventually, you're going to break through it. That's what's happening here. And with that being at the same price at that flat level, that ends up breaking. And so it's the exact opposite of an ascending triangle, which would be a flat line at the top. You keep testing that over and over. Eventually, you're going to break through it. But anyways, looking at the chart and leading up to earnings, I had just noticed what looked like this downtrending line, and I had thought, it looks like, price is potentially outside of that line. I could adjust it to include the open from December 27th, but, there weren't any closes outside of that downtrending line. So, I figured this was all right. In the earnings call and the short that I put out, I had drawn this line roughly. Here I have fixed it to the highs, one being the high hit on November 16th, the other one being the high hit on February 15th. And so from that line, I saw that, price was breaking out of it before earnings, but it didn't look super strong. Also, it did look like maybe there's kind of a double top forming over here. So I was just thinking that it looked like the price was going into earnings at right around resistance. And so I had expected price to go down. During the trading day of Thursday, I had placed an order to buy a put just for fun with a $3 strike, thinking that, price might go below $3. And, to be honest, I got nervous. I placed the order expecting it to not be filled, and it was filled in like the last 10 minutes of trading. I saw price go up in the after hours. If we look at the price, during after hours, I was thinking, man, I'm going to lose that money. It was just $20, so not a big deal. But, it's like, okay, well, I placed that order. I'm just going to sell it at $1 gain, which is, 5%, not that much. But, it's something, it's not losing money. The expiration for that contract was for next Friday, so March 22nd. And, I just got rid of it because basically, if I switch over to Chrome, max pain for Blink for next Friday is $3 a share. So, I don't really think price is going to go much lower than 292. I mean, it could, but, I didn't want to be holding onto that contract and have price close at, 299 or 3 or 301, whatever, and potentially lose some money on that. And if we do actually look over at the options chain, I can pull up the contract that I had. So let's see, puts over here. I had bought it for $20. I could have made 20% on that. I could have made $4 had I sold, at 24 as it's listed here at that price. I didn't do that. It's good to get rid of options, not hold on to them too long. And so I did dump that. It is quite possible I could make more, but good to not get greedy with options and stuff. But anyways, I'm not necessarily short Blink. I'm not necessarily long Blink. I had just noticed this pattern. And so what I see in the chart other than that, I see that we've got this big move up from this double bottom. And then it looks like consolidation over here. So maybe one would think that's a bull flag. But leading up to that bull flag, we did have this drop. And so I actually view that as a bear flag. You got the flagpole coming down here. And then let's see, from over here to up here, it looks like that's an uptrending channel, uptrending consolidation. So that makes me think that's going to break to the downside. And so there were just a number of things suggesting that this might be breaking lower. And so that's the position that I took. Had I paid closer attention to Blink, I would maybe have held on to the contract a little bit longer, thinking that maybe it would return to the base of this triangle. But, it might not do that over the course of next week. So, like I said, good to exit options, before you get too close to the expiration. And so I did that. I made $1, nothing crazy, but, it was a fun little thing to participate in. But looking at the chart now, it does look like it's quite possible Blink could be forming a double bottom here. Also, I don't know if you've noticed, I did do a Fibonacci retracement. I'll actually adjust it in a minute, but I just want to bring that back into picture here so we can see that it does look like price did close below the 786, which is at a price of $2 and right around 94 cents, 93 cents, did close on Friday below that. And so this retracement is based on the low hit on February 23rd and the high hit, just before earnings on the 14th. And so from that range, I thought it'd be nice to get like a fine scale approximation of where price might be settling at. And it does unfortunately look like price settled below that level, but it could be a fake out. So on Monday next week, I would look for a close above 293, maybe 294. I think that could suggest that the bottom is in, but if price does go lower, specifically if it goes lower than Friday's low, which was $2.81, if it closes below that, and especially if it closes below 278, I think that could be bad news. But it could also be a fake out. You always want to look for confirmation, which would really be 2 consecutive closes below these levels. So let's say we get a close on Monday below 281, and whatever the low is for that day, if the close on Tuesday is lower than Monday's low, that would suggest confirmation of a break and that price is probably going lower. So I think that we need to be keeping an eye on 293, 294, get a close above that. Then we could start to think about retesting this downtrend. But if that doesn't happen, if we do get lower closes, I do think price will be going to the downside, potentially to test this horizontal line here at $2.22, which is based on the low over here hit on October 30th, a low on that day of $2.22. Got some wicks below it over here, wicks touching it over here. So it does seem like that level has been tested a number of times. If price does go that low, I do think it quite possibly will break below it. But before it gets there, one level that we might want to pay attention to is the 1618 extension from this retracement. That is at a price of $2 and right around 33 cents. But I think actually a better way to approach this is rather than taking the Fibonacci retracement just from this little run up, I could actually take it from the lows over here, 218, up to the high here, hit on February 15th. That was at a price of $3.62. So rather than moving this Fibonacci retracement to those points, I'm actually just going to adjust the high and the low to correspond with those points, just because it's a little bit cleaner, easier for me to do while recording this. And so let's see, that high 362. So those are the 2 points, corresponding to that range here. So we can look at levels that we will want to be paying attention to, that need to be held, that need to be respected. And actually, looking at the close of 292, it does look quite possible that 290, which is a 50% retracement, has been respected, that has acted as support. So that's another level to be paying attention to, $2.90. Do we close on Monday above 290? If so, the bottom could be in and we could be retesting the top of this triangle, this downtrend. But if price does continue lower, if we do get a close below 281 or 278, which was the low over here on February 23rd, if we get closes below that, see if they are above 273. That is the 618 from this retracement. So this level right here, that might be a great dip buying opportunity before a retest of this downtrend. But if 273 does not hold, 248.8, right around $2.50, psychological level there, that corresponding with the 786, if that holds, that could be a really nice dip buying opportunity before we do test the top of the wedge, which, quite realistically, might get rejected from the top of the wedge, or top of the triangle, I should say. But if, a dip buy is made, an order is placed at right around 250, that represents, testing the top of the wedge, let's say going back to the 382, that's at a price of $3.07. Let's say even just going back to the 50% retracement at 290, testing the top of the wedge there, further, I need to adjust the axis here, which I can't do while I got this here. Actually, I guess I'll just do it like this. I'll just drag this over. How about that? And so, that is a 15 to 16% swing. So I do think that a bottom will be found and there is potential for a nice swing move, at least 10%, 15% maybe, before I think ultimately getting rejected again from the top of this triangle. But it's quite possible there'd be a break and, then we could be seeing, upside to retest these highs, and that'd be like a 40% swing from 250. So something to keep in mind there. But if 250 does not hold, I do think the bottom of this triangle is going to be tested again. That's around 222. So keep that in mind. And I will do a follow-up on this if you do request it. So let me know in the comments below. But those are just my thoughts. If you found them helpful, share your thoughts in the comments down below, and I will be happy to do another video. Yeah, thanks a lot for watching. Make sure you subscribe. Take care.